Anna, thank you so much for taking the time to do this interview. As a P professional who has sat on both sides of the table, as a strategy consultant, as an operator inside major data businesses, and now as the person driving growth across Triple's portfolio, your perspective on the main challenges facing portfolio companies today and how you navigate AI in that context is incredibly valuable for us. At Dedale, we've been tracking public markets in B2B software and tech for 5 years now, and it's been a rocky start to 2026. Some people are describing it as a real reset in the markets with SaaS valuations and growth multiples under real pressure. So we are very much looking forward to drawing on your experience to better understand how AI is concretely impacting your portfolio companies and how you are responding. But before we get into all of that, could you start by introducing yourself, please?
Yeah. Thanks, Julia, for the invite, and it's great to be here. So I'm Anna Amadio. I'm a director of value creation at Triple Private Equity, and I'll talk about it a little bit later. But yeah, it's a mid-market fund based in UK and the Nordics, founded more than 3 years ago. I have like around 12 years experience in financial services, started in consulting in Bain and Company, and then moved in-house, always focusing on strategy and M&A across mostly financial services. So started in Thomson Reuters, which then became Refinitiv LSEG. So spent around 10 years there, mostly like focusing on transformational M&A, including the Refinitiv London Stock Exchange deal that also, gave us exposure to the Blackstone like PE ownership. And then moved into Deutsche Börse as well. That was also, like Montego was partly owned by private equity. And then moved into private equity around 2.5 years ago with Triple. So that's me in a nutshell.
Okay, thank you. Well, such an impressive background that you have. And Triple is relatively young firm, as you said, founded in 2023, but has already built a portfolio of 5 platforms, 11 deals, including bolt-ons across the UK and Nordics. How would you describe what Triple is and the investment thesis of Triple?
Sure. Yeah, so as I mentioned before, Triple is a mid-market focus fund. B2B software and data and information services is really our sweet spot in terms of segment and focus. And from a geographic perspective, we focus on Northern Europe really, but mostly like UK, where I'm based in the London office. And then we also have a presence in the Nordics and a Copenhagen office. In terms of the investment thesis, so is quite, specific and focused, right? So we really stand behind companies that are proved from a customer perspective, so they have a solid offering and vetted by the market, but also from a financial perspective that mostly translate into attractive top-line growth and profitability. And they provide essentially like critical infrastructure, both on the software side and the data side, in markets that are kind of subject to positive tailwinds, especially if we talk about regulation, for example, as one of the main drivers. And our 2 main segments, given that, are governance, risk and compliance, and financial data and information services. And then the other strand really of our investment thesis is kind of the value creation approach and operating experience. So that translates both into the origination side. So essentially, given our network and that we know the companies, we know the founders and the PEs, that means that we can source off-market deals given that. But also, and I'll talk about it a bit later as well, that means that we can add value to these companies given our network in terms of talent, our industry knowledge, and can support essentially the growth, the next phase of growth of these companies that sometimes are founder-owned, for example, and support them in their journey with our value creation team.
Okay, well, thanks a lot, and we'll get back to the portfolio companies that you have, because it's really the topic of today, understanding how AI is impacting it and how are you responding to this. But before we get into this, I would like to go a little bit deeper on the value creation that you were mentioning. What does it mean at Triple? How is it different from a traditional traditional investment team does?
I'd say we're a bit different given what I've seen also in other private equities. Probably the easiest way to frame it is that we are a bit of a mix and hybrid between the classic investment team remit and the operating team. So we have a hard job and busy job to do. But really, what the philosophy of Triple is that, again, like value creation and investment teams are equal citizens. That means that we get involved from a deal perspective from the very beginning, and in alignment with the investment team, we really focus on assessing, the company, the market potential of the company, and also, the growth lever and the value creation levers that essentially underpin, our investment case. And we do that also in partnership already with the management teams before we invest. And that creates a good alignment because, of course, I mean, if you don't have that, it's really hard then to deliver on the value creation and being in sync with the management. After, if we decide to go ahead after the investment, then, of course, I mean, we focus on delivering on the value creation plan and the strategy that we think underpins the investment return. And our approach really is encompassing. We have multiple levers that we pull, but really, the focus of the value creation team is to augment the management in delivering on the strategy. We have some levers where we focus a bit more in terms of driving, as that can help also with bandwidth, like pricing, M&A, and so on, but really supporting the management teams in delivering on the strategy across all the different levers.
Okay, very, very interesting. And so I understand that you're very much involved in your portfolio companies, and I imagine as well in the decision making around AI initiatives that are very, very much of a focus right now. And so I would be interested to know, because there are of course we have two levers for AI. There is first, portfolio companies can leverage AI operationally, first to be more like to automate their workflows, to be more efficient, to have perhaps less resources to do the same tasks that can be automated. So this is one lever. And the second lever is more to build AI-driven products for their customers. And so these are actually two quite different things. Where do most of your portfolio companies sit today, and which one excites you most?
I think, all of our portfolio companies, really, how we see AI is more an opportunity, right, than a threat, especially given the moats in terms of positioning, access to clients, the partnership that they have, the knowledge, especially when you talk about the governance, risk, and compliance, but also the data and the unique data that they have. So given that, we think that the AI opportunity is still quite relevant and encompassing. As you say, how we are thinking about it across our portfolio companies is, I think there's like two main strands, as you say. One is kind of how we can drive efficiency and improve, the bottom line really with mostly like internal use cases, improving the code, releasing kind of resources and focus on higher value activities and, focusing automation of the lower value activities. And then, of course, how we can apply AI into the product, right? So that's probably another strand, which is how do you communicate it to the markets, which is also very relevant because, of course, customers are now expecting some level of communication, but are also potentially nervous, right, on how much AI is used. So across our portfolio companies, of course, the lower hanging fruits probably sit in the efficiency buckets, and we have a couple of portfolio companies that we've had, in our ownership here for longer that have already started to roll out some of these kind of use cases from, a sales efficiency perspective, also leveraging some of, the capabilities across, for example, the CRMs, or also automating, customer contract, digitizing the contracts and things like that, which is already, a big driver of efficiency. On the product side, of course, that lies the opportunity, but is much more sensitive. First of all, we want to make sure that we do it in partnership with clients, right? So, because again, when you talk about anything which is either related to compliance or, related to sensitive data that are used for trading, for example, you want to make sure that you don't have a black box approach when you think about AI in products, but AI as an augmentation layer to still a human kind of interaction. So that's how we're framing it. But of course, that's very excited. There's a lot of good opportunity. Of course, for us as private equity, also we need to make sure that we take into consideration the return on investment, because some of these things might have a longer payback. So it's really focusing on the things that add most value and to the existing kind of proposition versus doing something totally groundbreaking, but probably the clients are not ready to take yet.
Okay, very, very interesting. And you were saying that it's in the environment where you are in GRC compliance, it's more complex because there's a lot of sensitive data regulation, etc. So this brings me to my next question, which is a good transition to around your portfolio companies. So the first portfolio company that you have, your very first investment was SmartSearch in April 2024. 18 months after, so in January 2026, it had already acquired Credas Technologies for 78 million pounds. Can you please walk me through what the value creation agenda there was? What did you prioritize in your, let's say, first 100 days, and how quickly did M&A become the part of the strategy? And then we'll go into the AI topics later.
No, that sounds good. Maybe answering your last question, right? It's M&A was always part of M&A of SmartSearch strategy, in the sense of we always felt, given their positioning in the market, they're the leading kind of UK provider of AML KYC, especially for what we call professional services, right? So real estate, lawyers, and so on. And given the financial expression of that, so we felt they were in a good position to drive, in particular, the UK consolidation from an M&A perspective. Of course, where things are going well, and also, we had a busy first year and a half thinking about organic value creation. We didn't want to rush into that. So we spent a lot of time, scanning the markets, assessing targets, but, we wanted to make sure that together with Phil, who is the CEO, really, we found the right fit for M&A. And that's when, essentially we were aware of Credas, right? It was one of the other players in this space, very focused on property and real estate. But we felt there was a really good level of complementarity, especially when thinking about, of course, consolidating and, driving more scale within the existing client base. But for example, kind of expanding to partnerships, as well as leverage some of the product capabilities that Credas has that are complementary to SmartSearch. So from a value creation perspective and 100-day plan, of course, one of the key things that you need to do straight away after an acquisition is really the clarity in terms of communication, especially starting from a top-down perspective, what will the kind of leadership structure will look like, how does it translate into the teams really day to day. So we focus quite a lot on that, and on top of that, really the integration planning. So we usually support them into, or have a dedicated PMI function set up, and making sure that we draft an integration plan that gets you through the first year across the major integration priorities. So now we've done that, and really the focus is on execution of this integration plan that spans, across harmonizing the go-to-market, the commercial model, making sure the customer can really take the most out of both products. And we have a good roadmap for the rest of the year, essentially. So busy rest of the year.
Yes, I imagine, of course. And you were speaking about integration planning, dedicated PMI function that you have done for SmartSearch integration of Credas. Perhaps I can see as well that you have other platforms that you invested in. So within the Nordic GRC platform, you combined Risma, Comply Cloud, and Wire Relations into a new brand, Cerevo, to create a leader leader in Scandinavia. So you had three very distinct company cultures, product philosophies. So I would like to understand here, how did you do it? Because here it was not one, it was three players that you had to combine. What was the hardest thing about the post-merger integration, and what does success look like in, let's say, 18 months?
Yeah, definitely. So yeah, I mean, I think again, it could sound a bit fluffy, right? So when I was hearing these probably like 10 years ago, I was like, oh, I mean, they're talking about cultures, like who cares about it? But it's very important, right? So I think this, especially the first, say, 3 months, like of course you have a lot of milestones to deliver from a product perspective and so on, but it really is making sure that you start to have that alignment on culture. Communication is very, very important. So being, I mean, of course, as transparent as possible with the companies in terms of, you know, what is the plan, what are the key milestones, making sure that people feels part of the journey is also very important. So that's something that we did quite a lot as part of this broader kind of PMI effort. And then, for example, with Cerevo, really the focus on the new branding, right? So Cerevo, that was announced essentially between December and January, and then also moving everyone into the same office, which was again aligned with that timeline, gave a lot of, you know, boost of energy. And for people being in the same place, it's also like a game changer. So that was essentially beyond, I mean, all the planning, right, that goes behind all the other streams. That's probably the things that if you don't nail, it could go really wrong. And then now we're, of course, again in terms of execution of the broader integration plan, all the go-to-market part is integrated under, you know, TCO. And then, I mean, the main focus really and what good looks like is for Cerevo to become the leader GRC, you know, software platform for GDPR and InfoSec, really in the Nordic region. You know, it's like very strong foothold in Denmark, and, you know, especially again leveraging the strengths of each of the three platforms in a combined proposition from a customer perspective.
Okay. Okay. And I imagine that you are applying AI as well a lot to become this leader in this segment, right?
Yeah, no, exactly. And similar to the SmartSearch approach when you think about GRC and compliance, right? So how can you do it in a way that is an augmentation, you know, to the existing knowledge and capabilities, especially, you know, when you talk about GDPR in InfoSec, there's a lot of knowledge, there's teams of lawyers and so on. So of course you want to empower them, but still maintain the level of knowledge, you know, that is makes Cerevo like a partner for clients. But yeah, I mean, AI is top of the agenda for all our companies, and in terms of both product roadmap and efficiencies. Yeah.
And what interests me as well is, like, you know, AI, everybody talks about it. In GRC or compliance software network, AI has an obvious application in automating workflows as well, but it also introduces risks because regulators, they want human accountability. They want zero risk, right? Because it's regulators. So how do you think about that tension with these portfolio companies in GRC space?
Yeah, no, it's very important, and I think it translates into, again, how you bring clients into the journey of your kind of AI roadmap, and make them comfortable that essentially how we're using AI still give them a level of, you know, it's like a good hedge, you know, from a regulatory perspective. In particular, when you think about, again, things like AML, KYC, right, or GDPR, InfoSec, which are very sensitive. And then it also translates into like the own portfolio company like policies or on how they leverage AI. So that's another thing that we're doing for, you know, some of the ones that are more advanced to make sure that there is a clear, you know, governance framework and that's used internally as well. So I think it translates in both ways. But again, this concept that we have of AI as augmentation layer, not a complete substitute of you know, that kind of value add of the companies. It's really how we think about framing it across our companies.
Okay, great. And if we look a little bit forward, fast forward for 3, 5 years from now, what do you think? Will there be an AI native GRC platforms? What do you think? How will they look like for a mid-market companies? And how far or how close are SmartSearch and also Cerevo platform from that vision today?
Yeah. I think again, given the compliance angle, I don't think it will be completely like AI native. It's also like in terms of like customers and type of customers that you serve, because depending on size and level of regulatory complexity, they have different requirements. So there's definitely like an opportunity to make the workflow like more efficient, smoother, even self-served. Especially when you talk about serving the long tail, which apply, especially if you think about SmartSearch or Cerevo. But the more you grow in complexity, the more you grow in scale, of course, you need to make sure that that AI layer and that, efficiency play is matched also with the level of human interaction and augmentation, also because you have a level of each customer might want something slightly different, right? So it's also how you segment your offering based on like the appetite of clients to embrace AI.
Okay. Okay. Very, very clear. Thanks a lot about this GRC portfolio companies part. Perhaps let's go now to the other part of what you have invested into in data intelligence businesses. So you have invested in Legal Benchmarking Group a few months ago, and then Euromonitor, Excel, and Derivia very recent. These are your newest additions. These are more data and intelligence businesses than pure software players that we just spoke about before. Does the value creation playbook need to change, or is the underlying logic the same for these companies?
Yeah, so no, I mean, our value creation playbook essentially is broadly the same. So yeah, that it's like we always say, like we have around 8 levers, of which, like very focused on top line, like pricing, go to markets, and all of these, which with slight nuances, of course. I mean, it's applicable across our companies. Talent is also a constant for us, and then you have partnerships and M&A. So it's fairly, high level, so you can apply it across all of our companies. All of our companies are either, software, anyway, subscription-based businesses, so broadly similar business models. So it applies. Of course, I mean, the knowledge that you need to have and the network and so on is slightly different. But again, given, especially, like from companies' knowledge and sector knowledge, they're both quite complementary. So essentially, if you spend time in financial services, in like companies like LSEG, Refinitiv, which a lot of us are coming from, probably both. So we feel that essentially we can tackle it in a very similar manner, but you don't want to have a cookie cutter approach. So every company is slightly different. So, but our value creation plan still holds. Yeah.
Okay, great. And for a data and intelligence business, for example, like Legal Benchmarking Group, Derivia, or Euromoney, the data itself is a moat, right, today?
Yeah.
And does AI strengthen that moat because proprietary data becomes more valuable as a training asset, or does it threaten it because generative tools can commoditize what used to be hard to source insights? How do you see it?
Yeah, definitely. It's a good question. Yeah, like it's a question get asked more and more, right? So, but I think, I mean, when lucky in the sense that, as you say, our companies have a strong moat kind of against what you could call a disruption, right? So it's not just that they aggregate data, but how they source the data, as you say, is the most important things, right? So they source it either by unique client relationships. They source it like through like unique access, to specific data. And generally the data, especially if you think about companies like Derivia, is very complex. It relates to opaque markets like structured products or derivatives. So again, there is also like the point that customers wants to have the level of trust and confidence in the data provided, not being like scraped by AI. So again, as I mentioned before, for all these companies, we see AI as again again, an augmentation, an opportunity to, for example, make some of the processes in terms of data reconciliation and things like that more efficient. So potentially fill in some product gaps that you had before in a faster with a faster time to market. But again, the uniqueness of the data is really the moat of all these assets, and we don't think it's gonna get away.
Okay. And you're speaking a lot about client relationships, confidence, trust. This we hear as well a lot around AI today. It's great to have these workflow automation tools, but what begins even to be more important is the relationships that you have with your customers, the trust, the confidence. Do you feel it as well?
Yeah, no, for sure. Yeah, and I think it's both in terms of like, again, where is your data coming from? So the data is coming from those clients, right? So that gives trust ultimately also that for people that use this data, that, there is a uniqueness, and there is also a level of curation of the data that is done. It's not just I get the data and I share it with you, right? So because most of these data sets are used to make decisions that sometimes, could cost either money to a business, or again, if you take a decision and it's compliance related, you could, have a fine at the back of that. So again, clients need to have, it's like a strong trust in the data that is provided, and that's also related to the brand strength. But we don't want to dilute that with any, like AI scraping.
Okay, very interesting. And these three businesses that you acquired recently, Euromoney, and Derivia, given the experience that you have with SmartSearch, with GRC platform, and your broader experience, what are the first AI-related questions that you are asking to the management teams right now and that you are prioritizing?
Yeah, I'd say, of course, during diligence, we do like a pretty thorough assessment, especially on that question on disruption, right? So by the time that we have invested, we need to be already comfortable on that. It's a bit too late to ask afterwards. And now it's really, a lot of these companies are already embedding AI somehow, into their kind of processes, into their workflow, but it's almost like bringing it up a level and thinking more like through as a strategic priority for the company. So again, as I was mentioning before, almost like the ultimate goal and the question that we ask is like, how do you surface kind of what you're doing potentially already to clients? How do you communicate? What are the main use cases that you think could be the low-hanging fruits, especially on the efficiency side, and then how, of course, we embed AI into innovation and product roadmap, and then on the third, of course, there is a bit more on terms of like how do we test it with clients, what's the cost investment related to that, as of course you will need a proper assessment. So that's our approach across the company. So bringing it up a level and then have a clear roadmap that is approved at board level ultimately before it's rolled out.
Okay, great. Thank you. Thanks a lot. And now we'd like to go for the end of this interview around the topics around you, to speak a little bit more about you, about the value creation, and about triple partnership with the companies that you acquire. So my first question is that you come, of course, from Bain, then Refinitiv, LSEG, Deutsche Börse. How much does that operating experience shape the way that you engage with management teams today?
Yeah, very, very much so, right? As I mentioned before, value creation and, our operating experience is one of the core parts and pillars of Triple's investment thesis. And it reflects into the fact that we have been in the shoes of these, companies and management, right? We know also how hard sometimes it is, right? To drive change in an organization, but also we have been also in portfolio companies, right, of other private equities. So we've been in the shoes in terms of being managed, being owned by private equity. So that means that that partnership approach, we can first of all speak the same language with founders. We can add value, and speak the same language in terms of the sector, right? So that's one of the feedback that we always hear, especially when we get into a process, which is like, we usually don't need a lot of time to get up to speed on a market because we know that, and probably also we can work with the management to really support them in the growth plans on areas that potentially they didn't have access before. But again, we always do it in a way that's it's not top down in the sense that we force a strategy, but it's partnership, right? So we make sure that we align on the strategy before, and then we are really clear on what are the things that we support a bit more, pricing, M&A, partnerships, and so on, and everything else. Of course, it's supporting management in delivering on the strategy.
Okay, great. And Triple is barely a few years old and is almost already at more than 500 million euros of AUM with a rapidly expanding portfolio. What would you say, where are the biggest white space now for Triple in terms of either sectors or geographies that fit with your thesis and investment thesis that you described to me at the beginning? And how does that shape what you are doing on value creation today?
Yeah, I'd say, what we've tapped into in terms of, the two sectors that we focus on and geographically as well, there's still a lot of white space, right? There's a lot of mid-market companies. So we think there's still a lot to go after in these two segments. Again, if you start to unpick, like you say, okay, it's just two segments, but if you start to unpick it, there's a lot of sub-segments that, we just scratch the surface with our investment to date. So it's doing more of what we do. Both in UK, there's probably more that, we could do in terms of Nordic deals. And of course, we've done the Cerevo kind of acquisition, but we could do definitely more there. And yeah, in terms of value creation, that means that is really making sure that we finesse our value creation approach, the more companies we have. And for example, we've done kind of quite a few carve-outs as part of our portfolio companies instead of completely changing it, because we've seen that it works well. It's well accepted and received by management. So it's just making sure we leverage that. And also, we drive more scale in our portfolio.
Okay, great. And Triple positions itself as a uniquely hands-on in value creation, as you were describing before. What would a CEO in your portfolio company actually say is different about working with Triple compared to their prior experience with investors?
Which I think it's quite aligned with what I was saying before, right? So it's essentially this way of us, meaning kind of value creation, getting involved from the start, which is something quite unique. Usually, you get like operating kind of resources being involved after, based on like the investment kind of hypotheses of drivers of growth, and sometimes there could be a bit of misalignment, or maybe management not knowing really well what IPE wants, or how to leverage these resources. Whereas for us is really making sure that we are very clear and very open. Sometimes you are also open in terms of where we don't think there is an opportunity, right? So for example, there's some international expansion levers that most of the time you see, right, in business plans, and sometimes we're like, we think there is a lot of white space based on what you do already. Let's talk about international expansion in 2-3 years, but we have that discussion before we invest, right? So that when we start to think about execution, we are already all aligned on what could move the needle, especially in the kind of first 1 to 2 years of ownership. And of course, then we work with the team to refine the strategy. So yeah, it's really that. And as I was mentioning, is that encompassing way of thinking about value creation that start from us being on the board, of course, but then cascades down into like value creation levers, and of those again like being really clear with management of the things that we can drive for them. Again, pricing is usually like something that we tackle as a consulting project, right? And of course we make sure that the ultimate stakeholder is in the company, but at the same time, we release the bandwidth because there's a lot going on usually. And in some other cases, especially everything which is like go-to-market, sales, overall strategy, the business, kind of running the business, it's really management. And so we're there to support them on that. So yeah, the partnership approach, if I have to summarize, it is probably the differentiator.
Okay, great. And for a senior executive at a B2B software company in the finance or GRC space or data intelligence space who might be watching this, what would you want them to understand about what it's actually like to partner with Triple?
Yeah, again, I think you get like we are open, we want to essentially support you and the business to drive growth, right? Like the incentives that we have, like between management and between us as private equity are all the same, right? So we're all in the same boat. And as long as we're aligned on the levers, like of what will drive value, then everything will flow through. There's not a lot to over engineering. So yeah, that's in a nutshell. And of course, bringing kind of resources, is particular when it comes to talent, we've seen is one of the main drivers where we can support management, especially at the start, and can move the needle quite quickly. That's the area where our network really helps.
Okay, great. Well, thank you. Thanks a lot, Anna, for your time. It is great to have your insights on the value creation and on AI impacting your portfolio companies. It was really great to have you here today with us, and see you soon.
Yeah, thanks. Thanks for having me.
Thank you. Bye bye.
Bye.